So this video is for the 2018 Leaving Cert Business short questions. So we'll take you through the answers now. So question one was a Unit 1 question on consumer. So you have to fill in the blank spaces. So fill in the appropriate words to complete each of the following statements. So refund, replace, repair. These are the forms of redress available to consumers under the Sale of Goods and Supply Services Act 1980. The Small Claims Court provides a solution to consumer conflicts and can award compensation up to €2,000. The term merchantable quality in consumer law applies to consumer products that are of reasonable quality having regard to their price and durability. The CCPC, so the Competition and Consumer Protection Commission, is responsible for investigating, enforcing and encouraging compliance with consumer law. And the Sale of Goods and Supply Services Act 1980 states that all providers of services will provide a service with due care and attention. Okay, question two then. Two implications for a business of changing from a functional to a matrix organizational structure. So remember, the matrix structure is almost like having a team structure where there's an expert from each of the departments in a business, and functional is the most common structure. We've got like a marketing department, a sales department, etc., etc. So one of the first implications here is training staff. So the cost of training new staff has to be absorbed from the business. So that can be a cost to them. However, staff development may mean new skills in the longer run are brought to your department. Could be staff conflict. Staff may resist working outside the departments, see each other as threats, dislike working outside their comfort zone. That can lead to industrial relations issues. Question three, you have to circle the correct option in each of the following statements. So an acquisition or takeover is an inorganic growth strategy. So this is the expansion chapter, Unit 5. In a merger, a business, a new legal entity is created. So when two firms come together, they set up a new business, so a new legal entity is created. In strategic alliance, well, that's temporary. So it's a temporary coming together of two businesses. They go back to their original position once the alliance is finished. Expansion can be financed by debt capital, which includes, which does not include ordinary share capital. So remember, debt capital is like loans from the bank, and equity capital would be your share capital. Economies of scale are defined as the unit or average cost decreasing as output increases. In other words, you're making more stuff, so it's cheaper to make it now. Question four then, so you've got different finance options. You've got to match the box here. So leasing is E, it's renting but never owning the asset. Hire purchase is D, it's purchasing an asset by installments, so you only own it after the last installment has been paid. For three, an overdraft is A, so it allows you to access funds to an agreed limit above your actual balance in your current account. A grant is B, a financial contribution given by an organisation like Enterprise Ireland, for example, for a specified purpose, providing certain conditions have been met. And trade credit then is F, receiving goods from suppliers and paying for them at a later date. C, they're selling a trade debt to a third party at a discount. That's called factoring, or factoring of debtors, which wasn't the option that was listed in the question. For question five then, study the bar chart below, and which illustrates a country's visible trade from May to August 2017. So the highest level of visible exports. It's obvious, you can see that with May there. The month which had the largest balance of trade, well, that would be August, because balance of trade would be the visible exports minus the visible imports. Explain the term import substitution. So this is replacing imports with domestically produced goods. In other words, making it at home rather than bringing it into the country. It can reduce trade deficits because imports reduce. So like if you decide to produce maybe bananas yourselves rather than bringing them in, that's obviously going to decrease the amount of reliance on imports. Question six then, so you fill in these missing letters A, B, C, D, and E. So this was the break-even chart. So the answers there: A is 360,000, B is 400,000, C is 76,000, D is 600,000, and E is a minus of 360,000. So explain the term working capital. This is cash available for the day-to-day running of a business. It's money the business has to work with, and it's used to pay for your current liabilities. So remember, your current assets minus your current liabilities is your working capital. Outline two problems caused by insufficient working capital for a startup business. There could be cash flow problems. There's too much liabilities or too many liabilities and not enough current assets. So it's difficult to get loans as a result of this because too much of your money may be tied up in owing other businesses. or banks or things like that, like bank overdrafts or creditors or things like that. Your objectives cannot be achieved, like short-term needs such as acquisition of stock cannot be achieved because, again, you don't have the free money there to pay for it. Outline your understanding of government policies of privatisation and deregulation. So privatisation is a state-owned business sold to the private sector, telecom Éireann or Aircom or Air was an example of that. So it allows for finance to come into the government due to the sale of this asset. Deregulation then is removal of trade barriers to enter an industry or market. Like the taxi deregulation allowed taxi drivers to enter the taxi market with a lot less restrictions. So when the taxi market was deregulated, it made it easier for people to become taxi drivers. Question 9, these are true or false questions. So you can see there false, 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 true and true. And question 10, distinguish between induction, training, and staff development. Remember, induction is at the start of the job when you get the job for the first time. So it's for new staff joining a business. It familiarizes new staff with how a business works and operates. Whereas staff development is like existing employees taking on new challenges to further develop their skill set, like job enlargement. So giving employer higher skill levels, new tasks, and more experience in the job. So that is the solutions to the 2018 short questions for the Leaving Cert.